Okay, we're just about finished our first week of slides, so onward with a few looks at income statement and a wrap up. Now, if we wanted, we could have an income statement that's really short. Okay, the most easiest way I can explain it is just right here. We got Billy's delivery income statement, year ended 2008. First line, service revenue, bang, 600,000. Less all of our expenses, 520,000. Earnings after taxes or net profit, $80,000. Okay, now if I was going to talk to you in a conversation on the street, this would be all I would need. Short, sweet, simple, to the point. Okay, but when we're running a company, it doesn't give us that much information. We do have revenue, known as our top line. We got all of our expenses, and then down at the bottom, or the bottom line, we've got our net profit. This doesn't help us too much if we're going to really look at how our company is doing. So we've got something called the stepped income statement. As you can see, the stepped income statement is a little bigger on detail. Right down to the first line of service revenue, it's the same. But then we have cost of sales. So Billy pays his drivers a percentage of the deliveries that they do. So based on this, I would say that if they're doing a delivery that they're going to charge their customer $100 for, Billy pays the driver $33 to do the delivery. So that his gross profit is $400,000. Okay, so that's one step we've got right there. $400,000 in profit. Now we've got operating expenses. We have all kinds of things in there. Salaries, wages, sales commissions, benefits, 185,000, advertising and sales promotion, 30,000, amortization, 35, and other expenses at $35,000 for a grand total of $285,000 in operating expenses. Now, these are things that are not going to change. Well, we mentioned sales commissions that change, but generally speaking, they're overhead. They're fixed. They're not going to change their operating expenses. Okay, so after we take out the 285, 400,000 minus 285, we've got earnings before interest and taxes, EBIT, also known as operating profit, and you might see that more often than not, depending on which accounting firm you're dealing with. Operating profit $115,000. Interest expense $30,000 gives us earnings before income tax $85,000. So we had an operating profit of $115,000. We had some interest. Now we've got profits of $85,000, earnings before income tax. But now we've got to pay the government. The government, that's how they keep our roads and schools open. We pay them, in this case, $5,000 in income tax. So what's left over, the very bottom, the net profit, the earnings after taxes, available, all the profits available to shareholders, business owner if he wants, if he's the only shareholder. The net profit is $80,000. Okay, so from this stepped income statement, we've got a few segments that tell us basically what profits are in different parts of our company. So we've got gross profit. Day to day, that's how much profit we're making in every delivery. Then we've got a whole pile of overheads to pay, and so at the end of the year, our profit is 115, and we pay some interest, and we pay the government. So we've got some separate steps here that help us analyze the different parts of our income statement and different parts of how the business is running. And we'll talk more about some of these, especially the bottom two steps, later on in the course. Okay, so just as a reminder, stepped income statement lets us look at each area of the business related to revenues and expenses, and it's a lot more helpful than just revenue minus expenses equals net profit. Okay, wrapping it up in no particular order. Just a reminder, cost of sales, also known as cost of goods sold, they are variable or direct expenses. The more we sell, the more we have to spend, or more we have to buy of whatever it is we're selling. Okay, net sales, net profit. The idea is the word net means something has been taken out. So we're talking about, in one sense, the leftovers. Okay, so net means something's been taken out. Operating profit. To understand that, we have to talk about our operating expenses, our overhead, also known as our fixed expenses. So that's the profits after our cost of sales and our operating expenses are taken out. Gross profit relates back to actually the cost of goods sold or cost of sales. So that's that actually should probably be in section number 2. But simply revenue minus cost of sales gives us gross profit. Income statement, I think we spent a bit of time on that. Interest expense, it's what we have to pay on our rent, we have to pay on our money. Interest revenue happens every once in a while where we have a bunch of money saved up in the bank if we want to buy something. Then hopefully we've got it stored someplace that we can get some revenue on it. Typically we don't see too much of that, but it does happen. Every once in a while I've seen it on an income statement over the years. Owner's salary. Okay, owner's salary. We put that in the overhead. Now, in a proprietorship situation, it tends to be a little bit different and farther down the income statement. But the salary we want to look after in a corporation is typically something under management salaries, owner's salaries, office salaries, something like that. Okay, current ratio, you should know that from your accounting course. The same with the quick ratio. We haven't covered that yet. We will, but I'm just trying to get your jog your memory. Current assets and current liabilities. Remember, those are things we're going to use up or pay off in the next 12 months. Okay, and of course, proprietorship versus corporation. 99% of corporations are not traded on the stock exchange. They're actually held by people like you and me. Okay, and proprietorship is a down and dirty and cheap way of starting a business. Downfall of that one is you're pretty much liable for everything personally, whereas a corporation is considered in the eyes of the law a separate entity or separate person. Okay, so that wraps up week 1. There's a sample exercise on the content page that you can do, a spreadsheet, and the solutions posted as well. Have a look at the cells that have cell references and or calculations in them. Remember, we don't type numbers into cells. Thank you. Onward.